current market conditions and answer any questions you might have. Before we start, disclosures are important. Before we start, please read them. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, before we jump into trading psychology, let's talk about Alan. Welcome. Let me know if this is your first live event. Let's talk about current market conditions first. So looking at the stock forecast toolbox, right? If you look at the 10-day prediction, still shows an uptrend. I think especially medium to long-term uptrend is still intact. Basically saying there's not much movement below 666 level, right? On the downside. Let's look at spiders. I think we're getting close to that level, right? 666. So it basically says that we're at the important level, 50-day moving average, right? 6,700 on SPX. And the model doesn't see, as based on yesterday's data, right? It doesn't see a lot of momentum below that level, right? As of right now. If you do zoom out to 6 months prediction, long-term prediction, which were posted on November 1st, right? This is once a month on the first of each month. I mean, based on the news, we could get to 630, right? So I would not be too surprised to see 630, 640. It all just depends if this level will hold or not, and then what the inflow of the news are, which is important level. I think these pullbacks going to be shallow. What do we have so far? A few percentage points. So we're not even 5%, right? So about 4% move to the downside. So if we have, 5% move, I mean, 10% I think is excessive, right? 10% would imply 620 move to the downside. 650, right? It's about 5%. So 5%, I think this is totally reasonable, right? To revisit the October lows based on the price action. 10%, you would have to have some kind of additional information, right? Maybe prolonged government shutdown where, we're going into the next year with government shutdown. That could, trigger more move to the downside, or unemployment data ticking up, right? That could trigger. But for now, first thing first, bears trying to push the 6,700. I mean, we tested it yesterday, successfully rebounded, right? So we retested 6,700 yesterday. We got a rebound, so it held. But today we already have kind of a break below yesterday's high. So this is now important overhead resistance. As long as we're below, I would say 6760, then bears are in control, and they're going to keep pushing the market lower. If you look at the positioning data that just got recalibrated, it's actually 6,800. So flip point was around 67, 6,800, and the put wall is 6,700 going in, into this week. So what used to be a support is now becoming an overhead resistance. So bulls want to see the market above 6,700. Bears are going to want to see it below 6,700. And since it's a negative gamma, if we close at this level today, and let's say we close at these levels tomorrow, right? Then we can, the next level would be to revisit the October lows, right? These are October lows. All right, so let's, we always go through these exercises. So end of the year, right? This is where most of the positioning right now is in December expiration, right? A lot of people don't hedge, not really hedge in November positions, but most of the hedges in the December. Let's see, what if I do intraday? Okay, so 6,700, so it does change. Intraday, and then what's the gamma? Still 61. Okay. So let's look at not November, let's look at December expiration. All right, so one standard deviation, basically, by end of December, we are at 6,900, right? Revisiting the recent highs, right? So scenario number one, we are basically revisiting the recent highs. Right? Scenario number two, we're trading in this range, right? What the stock forecast toolbox predicted, right? We're trading somewhere between 6,400 and 6,900. And then scenario number three, we are, 10% move to the downside, around, 6,000. So scenario number one, right, if the government reopens and unemployment data comes in better than expected or within the expectation, right, for maybe small tick up, but then market will rebound. We still have strong earnings, and strong earnings are behind us. Scenario number two, basically, maybe government shutdown persists till November, but you don't have a strong rise in unemployment, and we're just kind of consolidating, dealing with elevated stretched evaluations, right? So that's scenario number two. Scenario number three, some kind of a negative catalyst beyond one standard deviation move. Maybe unemployment ticks up, maybe we impose more tariffs on China, right, or more restrictions on China, and China retaliates, right? And then, or unemployment ticks up. So then you have scenario number three. So how many of you think we're gonna have, and Alan, I think you're new, I haven't seen your name before, but maybe I'm wrong. Just type in if this is your first or not event, but these exercises are important because it can help you with the risk management, right? If you think we have scenario number one, you have to consider scenario number three as your stop loss, right? Or something like, and vice versa. If you think scenario number three, then you have to consider scenario number one as your stop loss, right? To make sure you put the right position size. Because it's not just important to predict where the market is going, but if the market is going against you, what is your risk exposure to the market, right? And that's number of positions, position size. You just go to this exercise, QQQ at load of the day. All right, Fred. SPX, I don't think it is. Okay, but we'll see. I think important is a close. If we close to the downside, then bears are gonna keep pushing lower. If we can get above 6,700, then bulls. But yeah, we'll see. So how many of you think scenario number one, two, or three? Fred, what do you think? Alan, Fred, what do you think is going to happen? Patrick, John, that's scenario number one, scenario number two, scenario number three. Fred heading lower for me. All right. Hand raised. Alan, you can just type in inside of the questions. In the go to webinar, there's a questions window, and you just type in questions. Heading lower. All right. So Fred says heading lower. I'm going to go with two. I mean, it does see. I mean, first thing first, we have to break 50-day moving average, right? But it does look like market is trying to break the, we're at session low on SPX, on QQQ, right? NVIDIA, we're heading lower. I would watch Bitcoin as a good proxy, right? Bitcoin is actually holding the 100,000 level. and you can see that not, the weak sectors are already kind of catching a bit, right? Consumer staples rebounding, energy rebounding, materials rebounding, home builders are not selling off. They led the market to the downside, right? These sectors led the market to the downside. So it could be kind of just maybe, I'm not calling the bottom, but, bottoming process has started at least in some asset classes, right? If, I usually like to look at small caps, right? Broadening of the sell-off, right? Like if small caps break below 50-day moving average, right? If high yield breaks through the October lows and, Bitcoin, then that would be a signal that, there is more room to the downside. But as long as they hold these levels, then it's just kind of a, sector rotation, and, QQQ held the best, the longest, so they're gonna go through this consolidation process a little bit longer than the rest of the sectors. But for now, yes, pretty vulnerable position. I would be bearish as long as we stay below, yesterday's close, 6,700. And it does look like sell-off is kind of starting to accelerate to the downside. Any questions? Like your narrative. Okay, thank you. Thank you. And, we did in the, this got erased, sorry. Forgot. But we just went through that narrative, explaining kind of, you can go here. And, describe interesting coming months. What are the current trends in stock market, right? You can use the AI. We do have marketing relationship with Vanguard Trading, some of the other broker dealers. So full disclosures, here. But recent level 68, 6,700. But with activity and some fascinating contradictions. U.S. indices have been climbing with S&P up about 30% year. Leading gains, energy stocks strong volatility, especially high. Investor sentiment, despite strong returns, investor sentiment remains surprisingly negative. Some analysts call it most hated V-shaped rally. Corporate earnings, over 80% of S&P beat earnings estimates, according to JP Morgan. AI tech optimism around continues to drive mega cap and market momentum. Economic data shows expansion, both service and manufacturing. Okay. Strong market performance, persistent investments, fear. So that's kind of a long-term narrative. And then why are stocks down in past 5 trading sessions? Please comment on goals. So yes, so we talked about in live training, we talk a lot about, so let's see what chat, what the Winston says based on its own training. Again, this is AI trained on financial data. And then we'll talk about the gold. I mean, gold, silver, you know, kind of were the first one to. I mean, Bitcoin was the first one, was the gamma squeeze, where you had these vertical move to the upside, then vertical moves to the downside, then gold and silver followed, and now you have these moves in Micron and semiconductors, some of the AI stocks. The past 5 years, here's the concise breakdown what happened. So earnings disappointment, right? Several large companies like Meta, Chipotle announced earnings worse than expected, right? CNN fear and greed index remain deep in fear territory. So people are still concerned about stretched valuation, macroeconomic uncertainty, US-China tensions on semiconductors, right? Control and global growth concern, right? Especially if government shutdown persists. You know, every week is, I think, 25 basis points or something like that from the GDP. Communication stocks and notable losses. Right, so consumer discretionary like Tesla stocks, some of the industrial stocks. Let's bring it to life with a chart for major industries. So you do see pullbacks. Okay, so gold and silver already started consolidation, right? We talked about silver. Kind of a typical, right? You have a gamma squeeze, right? What is gamma squeeze? What is gamma squeeze? And how spell squeeze? What is gamma squeeze? But it should understand. Comments and Kitco come for gold and silver outlook and support and resistance level. Okay. How much in option delta is incentive? If many traders buy short call dated options on the stock market, who sold those must hedge their risk. Then do those buyer shares of underlying. If the stock prices rise, the market makers hedging needs to increase rapidly. This forces them to buy even more shares. Right, sudden sharp price, and then often seen in me can trigger short squeeze. Right, if there's no more buyers left, then market makers have to sell the stock. So you see this in silver, right? You see this in gold, right? But I like it is settled at 50-day moving average. It's not making new lows. This is where this is a perfect setup where you can sell credit put spread like Fred does, or Alan if you're looking for. If you want to be more aggressive, you can buy call spread, but you probably want to wait till it gets above 50-day. Well, we're talking about gold, sorry. Same thing, I would say above this 20-day moving average. Once it moves above 20-day moving average, that would be your signal. But it's not making new lows. It's going through this bottoming process. It's going to be a choppy market. It's going to be volatile, right? I'm not calling the bottom, but I think the bottom is near. And at this point, I think there's more room to the upside than to the downside, especially if you're a long-term investor. Fred, does it matches Wyckoff comments? GAN largest asset of the CD traders are going to favor CLA and retail traders and rest. Thank you, Kevin. Thank you. All right. So how do we help on Tradespoon? Right, we have a few new subscribers. Thank you for joining. So we do have stock forecast toolbox, right? We talked about stock forecast toolbox that can help you determine direction, right? Like if you want to look at 6 months prediction and see what are the key support and resistance. 630. If we reach 630 by end of this month or next, I would not be surprised. If we close at 700, I would not be surprised. It's just a matter of market news, right? So I would definitely use these tools. We also have research tools, right? Seasonality. It shows you seasonality. Correlation, 76% correlation. Usually November, December, strong time of the year. And then if you look at the probability calculator, it can show you on the downside, you can see 660 right now, market sees, or on the upside, 680, right? Kind of a narrow range. So that would be the next level of support that I would keep an eye on, 660, 680. And then we provide signals, right? So we also provide signals. So my favorite is active trader. If you aggressive active trader, short-term trader, right? And when you want to see ideas short-term, right? Well, Google, right? Yesterday was Google signal. Today we didn't have any good signals that I like, but Google, Tesla, obviously they're under pressure. Yum, they're under pressure, but these are the, if the market reverses and you're bullish, then these are the stocks you want to trade. If you want to look at the bearish, I think today the bear was, so Macy's was the signal. That's actually not bad. I like Macy's despite the sell-off, strong uptrend, bullish signal. And then you have Hershey's, bearish signal for today, or VNO. So those are bullish and bearish trade ideas. You can use trade stocks, right? If you feel you need to leverage and you want to trade options, then same thing. Instead of buying Macy's option, you can buy stock, you can buy option, right? You can go this Friday, you can go to next Friday expiration, but the levels are the same thing, right? Instead of buying Macy's at $20.20, you can buy 19.5 call. I mean, if it's this Friday, there's no time premium, but a very little time premium. If you go into the next week, it'll be a little bit more expensive, but gives you more time. 1% stop loss, right? 20 cents. So if you buy it at 55 cents, you exit at 35 cents, right? And strategy A, you would use it if you see that the market is down, like today. Strategy B, yesterday's close, you would use if you don't see pre-market futures are down. So looking at the pre-market futures are very important. Microphone. All right, Fred. Thank you. Yeah, two opinions are always better than one, and especially if they match. All right. Any questions? So Bank of America, let me look what do we say. Bank of America, $1.40. It's Bank of America trading. It's actually slightly down. All right. So these are the signals. Active trader geared towards short-term traders, right? Usually holding period is a couple days. I mean, you can hold it longer if you want, let's say Google, and you think Google continues this short-term uptrend, and you can hold it longer, but that would be kind of based on your own research. And the most important is, especially if you're new to trading, consider only using 4 active positions at a time with maximum loss of 2.5% of your portfolio per position, right? You don't want to have drawdowns more than 10%, especially if you're new to trading and this is the first time you're seeing. So I encourage you to kind of read these notes. And these are signal generating, right? And the idea is here, we always do dollar cost average, especially in the volatile market. Don't put the entire position at one level, split it into two. Same idea with weekly trader. This model doesn't get updated every day. It gets updated every Sunday, right? Once a week on Sunday. And again, the time interval is anywhere from, it's a 10-day vector. So it could be 1 or 2 weeks, right? 1 to 2 weeks holding period. But same thing, right? This week, HP, right? On Sunday, we published HP signal, and then, if it reaches 26.13, then you want to have exposure to energy, then that is something you can consider buying. And same thing with bearish ideas, GameStop. If you want to short GameStop, then that's another bearish signal. So it gives you choices. Again, split the trade into 2. The difference here, if you enter in $26.26, you're looking for 2.5% stop loss, right? Because you're holding for a couple of weeks, which would be around 50 cents, a little bit more. And how I can sign up, Tradespoon. Yeah, so if you want to look at some of these signs, I mean, you just go to pricing, right? I'll drop the page. Right, so you can select any of these services and sign up. to all. Close QQQ. What do you mean? So for 520, 60 for 8 range. Nice. Okay. Fred, nice trade on QQQ put spread. Okay. What did I buy it? 480? 520. Okay, yeah. It's a short term. Okay. I'd use it more for longer term hedge, but yeah, you can definitely trade against short term. I mean, its market is oversold, so I do expect bounce, just not sure from which level. All right. So this is the services, tradespoon.com pricing. And again, you have different pricing if you just want picks. The one that I just showed you here, if you're looking for signal, then it will be picks. If you're looking for tools membership, then you also have Stock Forecast Toolbox, right? These screeners. If you want to watch my portfolio, then we do have Elite Circle. Thank you, Fred. I do like QQ. Elite Circle. Try it out, Elite Circle. So Elite Circle, you do have access to my portfolio. So today, Fred and I were hedging, right? So we bought a QQQ put spread, right? And this is just an idea of how to hedge, right? There's some option trades, QQQ Iron Condor. I did Iron Condor. So you would get a signal, right? You can enter your phone number and get an SMS alert. And then you have access to all of my orders and positions, right? And access to live trading room. So you can participate live, first hour and the second, and the first hour of the trading session, last hour of the trading session. So you can participate. And then you can watch the recordings. You get SMS message every time I trade. Some of these are stock trades, some of these are options trade, right? So I did the Micron trade, close the Micron trade from Weekly Power Trader. So kind of the same idea, right? You have Micron, bought at 234, closed at 239. And I believe this was from the Weekly Trader. Last week or this week, don't remember. Do we see Bank of America? Is it this week? Yeah, okay. So Google and Micron were signals from this week. I don't trade all of the signals, but this signal was posted, on Sunday. And in Elite Circle, we actually executed this signal. Right. And sometimes I trade options, so I closed the option spread, rolled it into stock, because I didn't want to limit my exposure by smaller stock position. And now, managing stock position. Get him to subscribe. Fred, are you serious? You want me to give Alan? If you want a reference from Fred, he's willing to give you to talk to if you're interested. So Alan, let me know if you. I mean, Fred has been with us. Fred, Ted, Kevin, they've been with us for many, many years. But if you're looking for reference, definitely can talk to Fred. All right, George, welcome. Let me know if this is your first event or not. All right, so any other questions? So hopefully you can subscribe to Elite Circle. That's all I have for today. You guys have been awesome. Thank you very much. And I will see you guys next week. Thank you. Thank you, Alan. Take care. Kevin, Fred, thanks, guys.